the components of an economy. Last time we referred to these components as players. This time we are calling them the elements. Same thing. The first one is the individual, aap, main, and everybody else. Then there are the households, every collective entity that represents itself as one economic unit. The firms, आप और मैं जहां उठकर रोज सुबह काम करने जाते हैं. The places we go to work every day. Then there is the thing that makes the world go round. Money, aka wealth. Let's see कि इन elements में किस तरह के interactions होते हैं. Let's look at the interactions within these elements in closer detail. Between the households and the firms, the first interaction is that the households supply labor to the firms. You, me, we all go to some place to deliver work, be it physical or mental, whatever kind. And in return of this, the firms provide households with money. It is human nature that we tend to save for the rainy days. अगर आप आदि मानव, early man, for those who don't have such good Hindi, तो अगर आप आदि मानव के टाइम को भी स्टडी करें, तो he used to accumulate food and fruit in summers so that he could consume them in the winters. Now that we have one common unit of purchase called currency or money, the households tend to accumulate this money over time. Now the important question arises, what to do with this accumulated wealth? One reason is that this wealth sitting at home is not doing us much good, except maybe that we'll be able to use it on a future date if needed. Another huge disadvantage of letting money sit there is that over the time its value will decrease. Let me explain this. With time, a thing that costs 100 rupees today may cost 110 rupees 2 years from now. Such is the effect of inflation. So if you left 100 rupees at your home for 2 years, they depreciated in value because that wheat you could buy for rupees 100 today will come for rupees 110 2 years from now. But you will still have rupees 100, which means you will need more money to buy the same amount of wheat. By wheat I mean atta. Hence, money must be allowed to grow. This is where a bank comes in. Banks are very crucial elements of an economy and represent its prosperity, stability, and complexity. So these households hand their money over to the bank. One, because it provides interest on the money deposited, which allows the money to grow. And two, because it is safer in the bank. Let us have a look at the firms simultaneously. These firms have needs to grow and expand, to increase their market share and sales, to increase their revenues. Why? To survive. And because things, raw materials, are going to get costly for them as well. To meet these needs, they also need cash. And where are they going to get this cash from? Exactly. They approach the bank and obtain this cash in the form of a loan. Let us have a look at this model from a bank's perspective. So households approach them for depositing their savings with them. In return for keeping their cash, the banks promise them an interest, let's say at the rate of 4%. This cash is then given to the industries in the form of loans, which is then repaid back by the industries with interest, say at the rate of 10%. So let's say that a bank gave 100 rupees to the industries at 10% per annum with simple interest and received rupees 110 at the end of a year. Simultaneously, they had taken rupees 100 from the depositors and paid them rupees 104 at the end of 1 year, which includes the interest at 4% per annum. So we see that the bank made rupees 6 for every 100 rupees it lent to the borrowers. बैंक ने 100 रुपए बोरोवर से लिए और वही 100 रुपए इंडस्ट्रीज को लेंड कर दिए. उन्हें 10 रुपए का इंटरेस्ट मिला इंडस्ट्रीज से और इसमें से उन्होंने 4 रुपए का इंटरेस्ट डिपॉजिटर को वापस कर दिया. and their own earning was 6 rupees. And ideally, this difference of interest that the bank received from the industries and the one paid to the depositors is what we call interest income of a bank. इस कॉन्सेप्ट को हम आगे चल के थोड़ा और एक्सप्लोर करेंगे इन अदर वीडियोस. सो इस मॉडल को अच्छे से समझ लीजिए बिकॉज एज वी गो डीपर वी विल बी एडिंग मोर एलिमेंट्स टू दिस मॉडल टू अंडरस्टैंड हाउ एन इकोनॉमी वर्क्स. फॉर नाउ you must have understood that in any economy, banks act as agents, connecting people who have surplus funds with the people who have a deficit of funds. There are times when you have a deficit of funds, like you want to buy a 7 lakh rupee car and have savings of rupees 2 lakhs only. This is when you tap into the banks for availing their excess funds. Please like the videos if you enjoyed them and subscribe to the channel and stay tuned for more content. If you want to see a video or have a question in mind, drop it in comments and we'll answer it. We are also available on Facebook, Google+, WordPress, besides YouTube. Please like us and follow us there to keep in touch. Thanks a lot for now. Bye-bye.